Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts today, and the first one I'd like to look at is the euro against the dollar. Now, if we look at this chart, we can see this, a small, unsurprising bearish black crow yesterday. Unsurprising because the market rose up to the neckline, currently at 117.48, of the recent mini head and shoulders top and was rejected by it. In addition to the neckline resistance, a little above it, we have the nearby rising short medium moving average, currently at 117.79, the falling short moving average, currently 117.64, and of course the old broken but still highly influential 2011 to date downtrend, currently at 117.71. That of course does not stop the market making another attempt higher. However, should the market stabilize at the neckline, then a likely potential target for the mini head and shoulders top would be in the 115.5 area. One final thing to remember, yesterday was the day. I've been going on about a potential monthly key reversal here for September for a couple of weeks now. Well, yesterday's close made it a monthly key reversal down. Now, do not expect any immediate action on the back of it. It is, after all, a longer-term pattern. However, it is one that ought to be considered going forward. So far today, a fresh of the test of the neckline is going on. The next chart I'd like to look at is cable, aka sterling against the US dollar. A somewhat spectacular daily key reversal up to finish off the month yesterday. It was also a third bullish white soldier and a first clear close back up over the bearish bump and run reversal top trend line, currently at 128.67. I'd mark further down on the daily chart target X1. It is coincident with a 50% Fibonacci line for 2020 at 124.42 and is a target for the bearish bump and run reversal top. The recent action threatens this target. Finally, yesterday we also had a monthly key reversal down here. Please remember, maybe no immediate reaction, just keep an eye on it. So far today, a small follow-on higher to the daily key reversal up. The market is starting to approach the rising short stroke medium moving average, currently at 130.07, and highs of 2 weeks ago in the 130 even area. The next chart to look at is the euro against sterling. A reactionary bearish engulfing pattern yesterday. This after the previous session's bullish white soldier. The main body on top was again capped by the short moving average, currently 91.46. However, the key March to April 50-cent Fibonacci line at 90.85 did not hold it up, and we had a clear close below it, the first for 3 weeks. The low was again halted, unsurprisingly, by the approach to the short stroke medium moving average, currently at 90.55. Question now is whether the market will this time like being below the 50% Fibonacci line. It didn't last time, but we'll see. Finally, yesterday was a monthly key reversal up here. It's a longer term pattern, just keep that in mind. So far today, the market's stuck in between the short stroke medium moving average below and the 50% Fibonacci line above. I don't envy it. The next chart to look at is the US dollar against the Indian rupee. A clear bearish engulfing pattern yesterday. It was capped on top by the 50-cent Fibonacci line for 2020 at 73.84, and the market dropped down through and closed below the important Fibonacci congestion, which has secreted within it the 50% Fibonacci line for September 2019 to April 2020 move at 73.68. Prices managed to drop below the short moving average, currently at 73.57, but finished right up there on it. So far today, we've punched down through the short moving average and into some fairly open territory until the mid-September lows in the 73.15 area. The final chart I'd like to look at is the US dollar against the Brazilian real. A bearish second black crow yesterday and a lukewarm follow-on lower to the previous 2 days tweezer top pattern. The market still has overhead resistance from the August highs at 563.33 and 567.25. Just in case, should this overhead resistance be taken out, then there doesn't seem to be that much overhead until the high of 2020 at 597.08. That looks about the nearest one of interest. Overall, the move back up over the broken lower time, currently 541.75, of the January to June bullish shift pitchfork has seemingly reinvigorated this big pattern. One final thing, like many other pairings, with a monthly key reversal here at yesterday's close, up in this case, I don't expect an immediate reaction, just consider it going forward. And that about wraps it up. So in the meantime, good trading and stay safe in the markets and in real life.